Good morning, everyone. I'm glad you're here because today we're exploring a topic that touches every corner of the globe, whether you realize it or not. Today, let's talk about why China's economy matters to all of us, wherever we live. Even if you've never been to China, its economic decisions and growth have a direct impact on your daily life, from the products you buy to the jobs in your community. For years, China has been the world's factory, making everything from smartphones to toys. Walk into almost any store, and you'll find products that started their journey in a Chinese factory. This massive manufacturing power has shaped the way the world shops and does business. Its growth has lifted millions out of poverty and reshaped the global economy. Cities have transformed, and new opportunities have emerged, not just in China, but in countries that trade with it. When China's economy is strong, it buys more from other countries: soybeans from the US, cars from Germany, iron ore from Australia, boosting jobs and businesses worldwide. This demand helps drive growth far beyond China's borders, supporting farmers, factory workers, and entire industries. But when China slows down, the world feels it. Factories may cut back, shipping slows, and businesses everywhere start to worry about the future. It's a giant engine in the global machine. If it sputters, everyone notices. The ripple effects can be seen in stock markets, commodity prices, and even in the confidence of investors and consumers. That's why leaders and economists everywhere watch China's numbers so closely. A small change in China's growth can mean big changes for the rest of the world. In 2025, China's story was one of contrasts: record-breaking exports, but caution and worry at home. While factories were busy, many families and businesses felt uncertain about the future. Understanding this split is key to predicting what's next for all of us. It's not just about numbers, it's about the mood and confidence of millions of people. These trends affect prices, jobs, and opportunities in your own community. Whether you're shopping for groceries, looking for work, or running a business, China's economic health plays a role. China's economic journey is deeply connected to ours. The world's supply chains, investments, and even innovation are tied together in ways that are more complex than ever before. The challenges it faces, and how it responds, send ripples across the globe. A policy change in Beijing can affect markets in New York, Berlin, or Sydney within hours. So, as we look at the numbers for 2025, remember, this isn't just about statistics. It's about understanding the forces that shape our world and our future. It's about real impacts on our daily lives. From the price of your morning coffee to the security of your job, China's economy is part of your story too. Let's dive in and see what China's economic puzzle means for the year ahead, and how it could shape the opportunities and challenges we all face together. So, what did China's 2025 economic report card show? The headline: 5% GDP growth for the year. This hit the government's target, an impressive feat in a tough global climate. But zoom in, and the last quarter grew just 4.5%, the slowest in 3 years. The annual number looked solid, but momentum faded as the year ended. It's like a runner finishing on time, but clearly exhausted at the finish line. The growth was driven by one area, while others lagged behind. This imbalance is at the heart of China's economic story. In 2025, China's export machine was the engine powering its economy, driving growth at a scale the world had rarely seen before. The country's ports buzzed with activity as millions of containers set sail for destinations across the globe. Inside vast factories, workers and robots churned out goods at record speed, from smartphones to solar panels, shipping them to every continent. China's manufacturing sector became a symbol of efficiency and scale. This relentless export boom was the main reason China hit its ambitious 5% growth target, even as other economies struggled to keep pace. Analysts marveled at the country's ability to sustain such momentum. In fact, China posted a record $1.2 trillion trade surplus, a staggering 20% jump from 2024, setting new benchmarks for global trade. To put that in perspective, it's roughly the size of Saudi Arabia's entire economy, highlighting just how massive China's export power has become. With weak demand at home, China looked outward for growth, finding eager buyers for everything from electronics to electric vehicles. The world's appetite for affordable, high-quality Chinese products seemed insatiable. This outward-focused strategy kept GDP strong, but it also created a risky imbalance, making the economy more dependent on foreign markets than ever before. China's ability to produce far outpaced its own demand, leading to concerns about overcapacity and the sustainability of this growth model. Over-reliance on exports leaves the economy vulnerable to global shifts, trade disputes, and political pushback from other nations wary of China's dominance. The world's dependence on Chinese manufacturing is both a strength and a risk, tying global prosperity to China's continued success. The question is, how long can this last? And what happens if the world's appetite for Chinese goods begins to fade? While exports soared, Chinese consumers were cautious. Retail sales grew just 3.7%, low for a country used to booming consumption. Meanwhile, industrial output rose 5.9%. The gap between what China makes and what its people buy is widening. The main culprit, a struggling property sector. Falling property values made families feel poorer, so they saved instead of spent. This cycle of weak spending and job uncertainty is tough to break. The government knows it must boost confidence and get people spending again, but that's easier said than done. The property market has become a heavy anchor on China's economy. Once a path to wealth, real estate is now in crisis. Property investment plunged 17.2% in 2025 as developers struggled with debt. Construction slowed, hurting jobs and suppliers. For many families, falling home values erased their sense of wealth. When your biggest asset drops, you spend less, dragging down retail sales. The government wants to stabilize the market, but also reduce reliance on real estate. So far, the slump remains the biggest risk to China's economic stability. Another troubling sign in 2025, a rare drop in investment. Fixed asset investment shrank 3.8%, the first decline since records began. Private investment fell even more, down 6.4%. Private businesses, usually the most dynamic, pulled back, wary of weak demand and policy uncertainty. The property crisis and regulatory crackdowns made entrepreneurs cautious. Without new investment, job creation and innovation slow. The government is urging private firms to invest, but confidence is hard to rebuild. A healthy economy needs businesses willing to bet on the future. Right now, many are sitting on the sidelines. Restoring optimism is a major challenge for China's leaders. In 2025, China's exporters pivoted away from the U.S. amid trade tensions. Shipments to the U.S. fell 20%, but China made up for it by boosting sales to Europe and Latin America. These new markets became crucial partners, buying everything from cars to electronics. China also moved up the value chain, dominating in electric vehicles and solar technology. This adaptability kept exports strong and diversified risk. Chinese companies proved they can quickly adjust to global shifts. By building new trade ties, China strengthened its position in the developing world. But this also creates new competition with Western economies. The global trade map is changing fast. China's next moves will shape the future of international commerce. To fix the imbalance, China's government tried to boost domestic demand. The central bank launched a $144 billion program to get credit flowing to private businesses. They also increased pensions and extended subsidies for consumer goods. But many analysts say the problem isn't credit, it's confidence. People won't spend or invest if they're worried about jobs and falling home values. The government's measures have been seen as too small to spark real change. The challenge: deliver a jolt of confidence big enough to get people spending again. So far, that breakthrough hasn't happened. As 2026 begins, China stands at a crossroads. The country faces a pivotal moment where the choices made now will shape its economic and social landscape for years to come. The 5% growth of 2025 was hard-won, but built on shaky ground. Behind the headline numbers, deep structural issues remain unresolved, casting a shadow over the future. Heavy reliance on exports risks a global backlash. Other countries may impose tariffs, threatening China's main growth engine. Trade tensions and shifting alliances could further complicate recovery. Meanwhile, China's population shrank for the fourth year in a row. An aging society and declining birth rates are creating new pressures on the workforce and social safety nets. Fewer workers and consumers mean slower growth ahead. The shrinking labor pool makes it harder for businesses to expand, while consumer demand softens. The era of endless labor supply is over. Companies must now adapt to a new reality where productivity and skills matter more than sheer numbers. China's leaders must shift from real estate and exports to domestic consumption and innovation. Fostering entrepreneurship and supporting new industries will be crucial for future growth. That means rebuilding confidence, solving the property crisis, and navigating a tougher global environment. Restoring trust in the housing market and financial system is essential. The stakes are high, not just for China, but for the world. As the world's second-largest economy, China's path will influence global markets and international relations. A successful transition could create new opportunities everywhere. Innovation and cooperation could spark growth far beyond China's borders. Failure could mean stagnation and instability. The risks of inaction are real, with potential consequences for millions of people. 2025 showed surprising strength masking deep weaknesses. Beneath the surface, uncertainty and anxiety remain. The world is watching to see if China can build a more sustainable future, one that balances growth, stability, and the well-being of its people.